Greetings, members, one and all of the Salivation Nation. Silver's Dismal December. Let's explore. Well, so far the first day of December has not been very kind to silver. I posted a video relatively late in the evening, sort of reminiscing about silver's price and where it could go, and asking your opinion on where it would go by the end of the year. Well, silver has dropped even further in the trading day for December the 1st, 2021, the first day of the last month of the year. And in fact, silver fell over 2.6 points, down 61 cents as I record this video. Gold is actually up $5.90, up 0.33%. And so when you take that into account, we are now seeing a new high for the gold to silver ratio in the last few months. It is now 80-1. So the gold to silver ratio is rising sharply here to start the month. And referencing an article from FX Empire here, as we are seeing some pretty dismal trading here, especially compared to what we've seen earlier in the year, especially when we look back around February, March of this year. We saw silver rise up, close to $28, over $28 an ounce, and now it is struggling to hold on to $22 right now. They've initially tried to rally during the trading session earlier in the day, but they've given up the gains, and there's a lot of negative pressure on silver in general. And every time there's a rally, it seems like it gets pushed back. Now, I know people will be shouting from the rooftops, that's manipulation, it's price suppression, that's what's going on here. There's probably a lot more going on than we think here. I mean, silver as an industrial metal is something that we're seeing kind of hit hard. And a lot of it is because of the supply chain issues that we've been reeling here for quite a while. If we were to break down below that level of $22.50, which right now, that is where we're at, it's about $22.33, it could open up massive selling when it comes to the silver market. It's worth noting that gold is trying to save itself while silver does not seem to be bothered. It makes for a certain amount of sense, as gold is a reactionary metal to inflation, while silver is really seen more as an industrial metal. At least that's how it's trading right now. We will continue to see a divergence between the two metals. So in other words, you cannot use one chart to give you a heads up on another, at least not yet. But as for where we're seeing here, the prices are down for silver. And that's something that we're going to probably continue to see as we see gold kind of struggle to move one way or the other. If we see gold move down a little bit, we could see silver move down a lot more. If we break above the highs, we have a couple of long wicks, and then that's sort of the technical analysis talk, all the way up to the $23.60 level. It's really not until we break above that level that you can make any argument for strength at this point. Of course, right now, with gold being up a little bit and silver down, that gap is widening, and silver is being seen as a commodity. And people are fearful, I think, of the risk of holding silver at this point in the paper markets. Now, this does not translate into the physical markets. I'm hearing more and more dealers are not lowering their premiums as the price goes down. So what we are witnessing now as the beginning of silver's dismal December is the further separation from the paper markets from the physical markets. And that is a thing that we'll probably continue to witness as the month moves on, unless we see continued pressure on the spot price of silver. If that's the case, and we may see a rate of the premiums going down on silver, but not as fast as the rate of that is going down in the paper markets. For instance, if we see another 2% decline tomorrow, we may see silver premiums go down 0.5% or maybe 1% at most. We'll see. Now, what's going to happen over the next several days? Well, the jobs numbers will come forth, and some are saying that the likelihood that we are going to see that those numbers look fairly decent, and that can actually hurt silver even more. And so we'll find out what happens in the coming days. But to see this movement, especially the widening now of the ratio between gold and silver, is something to take into account. It's something to we're going to have to stomach here. And the U.S. dollar index failed to settle above the resistance of 96. It declined towards the nearest support at 95.75. And so the dollar index manages to settle below this level. It will head towards the support of the 20 extended moving average at 95.6, which will be bullish for silver and gold price. But so far that it's not materialized for today. And so as we see it go higher, it's going to be something that we're going to have to get used to. Will we see triple-digit gold to silver ratio? Possibly. But again, the real ratio to think about is the one that's tied to premiums when you buy it. But even more realistically is going to be the premiums that you have when you go to sell it. That is in the physical level here. And this physical is being crushed right now in the paper markets. But how will it look in the physical markets? What will you be able to get your silver for if you were going to go to sell it at $22.50 an ounce? Are you going to see $23.50? I don't know. It'll be very interesting to see what silver dealers are paying or local coin shops are paying for physical silver. I may inquire about that from my local coin shop to see what they're doing. However, as is always the case, it's not a good time to sell silver when the prices are low, even if you're getting above spot for it. Because again, there's a widening of the premiums that you are seeing when you buy the silver than you are when you sell your silver. In other words, think about it this way. In a normal market, places are paying below spot for generic, and they are selling it generic in a normal market for, let's say, $2 over spot. So that spread is maybe, let's say, $2.50 or $3, just for the case of simplicity. That's a $3 spread if you're going to sell your silver. Well, right now, if you are paying $9 over spot or $8 over spot for a silver eagle, for instance, and they give you $2 over spot, that is a $6 spread. It's quite a bigger spread, and a lot of that you can tie to inflation or what have you, but that's a larger spread than you would have seen before before where the markets have changed as far as premiums are concerned. So just because you're offered a higher premium for silver does not mean that you won't get the shaft if you go to sell in these markets. This is why I'm encouraging people not to sell for silver's dismal December. Hang on to it. If you can stand to hold on to these fiat debt instruments here, these are the things you want to get rid of if you need to and in case of emergency. Hold some of these in the background or in as a savings as well. Think of your silver as a long-term savings. And long-term savings that gives you the power to control when you sell it. Not that you have to sell it at any time. So there you have it. Very interesting market today, what we're seeing. That separation between gold and silver price, massive. And we are seeing the beginning of a dismal December for silver. Could things turn around? Well, sure they could. Am I holding on to my prediction of $30 silver? Why the heck not? Will I be wrong? Much more likely now than ever before as far as I'm concerned. But that's okay. But it just goes to show you just how volatile these markets are and how volatile silver is. There's a lot of people that are frustrated over silver, and it's understandable. Want to encourage you to hold on. Just hang on, hang in there. because I believe that it's only a matter of time before silver makes a comeback. What will that comeback look like? That comeback is not going to make you rich, at the very least, and at the very most, it's going to preserve your wealth. Is it a good time to buy silver? I think so, but keep in mind the premiums you're paying. In other words, you're going to be paying probably a higher percentage premium for silver now than you did, 2 weeks ago. We'll see what happens. It's an interesting market indeed, and all we can do is just kind of hang on, look at it, watch it, enjoy it, and go from there. Let me know what your thoughts are. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.